As a former underwriter, I get asked this question all the time. If my score is going upward, why am I still not qualifying? Let me break that down for you. Your score is not the whole picture. Your debt to income ratio is the decider. That is the number that actually decides how much you qualify for, what you qualify for. It crosses the finish line. It determines your term, if you can qualify for 15, 20, or 30 years. When your mortgage underwriter pulls your credit file and they see your score sitting at 643, you're thinking, I'm not horrible, which you're not. You're trending upward. You're only getting qualified for 240. You applied for 350. That has nothing to do with your score. That's where your DTI, your debt to income ratio, comes into play. A bigger number, a bigger role in crossing you to the finish line. Because we want to make sure you can afford that debt before your score even comes into play. If your debt to income ratio is already sitting at 50% and we haven't even added in your mortgage yet, you're not going to qualify. Your debt load is way too high for your income. We need to do some shifting and figuring out how we can get you qualified. The first thing you're going to want to take a look at is your debt load. Let's see which ones we can get paid down so that we can get you in that qualifying number. Second, we're going to look at that income, how it's qualifying you. Is it documented? Is it on paper? What are the actual numbers that we're seeing? Number three, we're going to look at the length of that employment. Have you been with that employer for 12 to 24 months? Have you stayed in the same line of work for more than 24 months? Are you job hopping? Where is the stability? Now, a good score is going to price that. It's going to give you your monthly payment, the pricing, what interest you're paying, and how much you're paying for that term of the loan. And it's going to distinguish what that payment is at that we're adding into that debt ratio. That's where your score comes into place. Now we add that payment, you're at that 50%, like I said, we take off your rent, add the mortgage payment in, you're still sitting at that 50, or now you're at 52%, you're not qualifying. That number needs to be below 43%, below 36 to not be house poor. While you're working on that credit score, which I'm not saying is a bad thing, you need to be focusing on two numbers. You need to understand the breakdown of your DTI. Drop DTI in the comments. I'll get you over my workbook. Don't forget to follow Real Talk Credit so that you can have top-notch credit and be mortgage ready.